Hi there, this is the story of Novo Nordisk, ticker symbol NVO. As you probably know, the stock price has declined quite a lot, from $142 to $48 per share. And now the current market cap is about 213 billion. And the most important question is whether Novo Nordisk is a great investment at the current valuation. And the answer, you will find it in this box. During this video, I'll open the box and you'll find the answer. Now, to understand my answer, you have to look at their business, what they do, and what's next. Because what's important is their earnings will grow more, and then also the stock price will increase over the long term. So let's begin. If you look at the revenue, amazing. Revenue has increased from 25 billion, 22 to 33 billion, 40 billion, and also for the first half of 2025, another increase in the revenue, over 10%. And surprise, if you look at their earnings, they are amazing. 7 billion, 12 billion, 14 billion, 8.5 billion over the last 3 years and a half. So they have great margins, an amazing business, great business. And now, if you look also, the price to earnings is about 12, and the dividend, they are also paying a dividend about 3.5%. So that's quite amazing. You also have to look at other indicators, for instance, free cash flow, which has been about between 9 and 10 billion over the last 3 years. And then let's understand why the stock price has declined so much and what's next. You also have to put a little at their cash position, 2 billion, and debt, 15 billion. But that debt is not a problem, as they are making over 10 billion, close to 15 billion in earnings. That debt can easily be paid in 1 year, 2 years. There is no problem with that. Now, let's understand why they do, and then why the stock price has declined so much. So, if you look at the revenue, this company, they offer treatments for diabetes, obesity, and rare diseases, right? And 90% of the revenue comes from diabetes and obesity treatments. As you probably know, they have two well-known drugs, Ozempic for diabetes and Wegovy for obesity. And the stock price, as a question, why the stock price has declined so much when you have high growth rate, high earnings, little debt compared to their earnings, and they operate in an industry which is expected to increase more in the future. For sure, we'll have more diabetes and obesity problems in the future, as people consume a lot of sugar and other unhealthy foods. So, let's start. First, why the stock price has declined so much? Because of lower growth, especially the management announced in their earnings call, they expect the growth rate to be lower, but still, they will continue to grow. Pay attention to this. Even if they'll have lower growth rate, they will continue to grow. That's an important factor. Then, another thing is competition. And when you have more competition, more companies that come up with treatments about the same quality, you will have lower prices. And if you have lower prices, what does it mean? Lower revenue, lower earnings. And that's why this is an important factor, why the stock price has declined. And of course, the most important thing is that high valuation. When this company started to report a high growth rate than what the market expected, and also the treatments for diabetes and obesity, investors, the market pushed the stock price of this company higher and higher. And that's why you have this massive decline. It was obvious when you've seen that high increase in the stock price over their earnings, their high valuation. It was expected that a decline will come, and that happened. Now, to open the box and show you the answer whether this company is a great investment or not, well, at the current valuation, let me show you, is a good investment. Not great investment, because there are also some risk, and I'll tell you exactly. Right now, it's a good investment. Don't expect high returns, but the current valuation, they'll deliver a good return for you, around 10% a year. I mean, if they increase their growth rate, you can easily have a rebound, a double in the stock price and market cap. If you look at their free cash flow, let's say 10 billion, you expect that it will increase more in the future. The market cap, yes, can go to 300 billion, around that level, or 250 billion, something like that, for a return about 10%. Now, here is the thing you have to understand. Because if you invest in this company and you rely only on those two drugs, you can be easily screwed. So be very careful. If you think that you rely on only those two drugs when you invest in this company, forget about this investment. The good part is that besides those two, they also have another 20 candidates on their pipeline, which are in late phase 3. This means, 20 candidates for diabetes and obesity. This means that the revenue will increase, especially if one of those candidates become as famous as the other two. So this is important, quite important. This is their backlog. Imagine like this backlog. Because yes, they have those 2-3 months, but we have to be aware, competition can come up with something better, and you no longer have this high growth rate for those two. If competition, one of the competitors come up with something better, the revenue for sure will decline, and so their earnings. That's why it's important they have those candidates, because you never know what will happen next with those two drugs, and you need a backup to maintain this revenue and earnings, high growth, right? And then you also have to be aware of the risk. They have those 20 candidates, but to be able to sell their 3 months, their drugs, they will need approval in every market they want to sell. In the US is FDA, and also in Europe, there are other institutions that have to accept their candidates. I don't expect Europe to be a problem, but FDA from the US may become a problem, because this company, Novo Nordisk, is from Denmark. And why not the US promote their own companies to make more money for them? Think about that. Now, from this level, as I said, you can expect a return even higher than 10% if you are pleased with that. But don't expect again the same valuation. To have an increase from this level 3x easily. Next year or over 2 years. That can also happen if they come up with something better and they are the only provider, as it happened in the past. But you also have to look at the downside, the competition. Don't expect more than 3x. Over 2x from this company. You have to be aware of the valuation. Yes, if you have another wave of speculation, if they come up with something better, then yes, you might have that valuation. But to be conservative, this is your return. Over around 10%. Even better if they can increase their growth rate a little and have a double, and that's it. And of course, the business will continue to grow over a longer period and also get this dividend above 3%. But don't expect high valuation, the market cap to go over 2 trillion or something like that. Don't expect that. So this is my take on Novo Nordisk. And if you want better investment ideas than this company, because you have to be aware there is risk, competition, FDA, simply go to my profile, press join, and choose Titan Investor. And there you have access to my portfolio where my performance over the last 4 years has been 30% a year, annual performance. This is much, much better than Novo. Because here in my portfolio, you have better and safer investment ideas. And your return is higher than what this company can offer. Plus, you also get access to the investing course, how to analyze businesses like Novo Nordisk, other in-depth analysis, so custom-made videos at your request, and bonus, access to the previous level Spartan and Gladiator. So, if you want to increase your returns, join my membership. And that's it for this video.